The Iraqi dinar is a major revaluation on the horizon. Welcome to today's deep dive into one of the most talked about subjects in currency speculation, the Iraqi dinar. While mainstream narratives often treat it as a long shot, there's growing interest in whether the dinar is poised for a significant revaluation. Behind closed doors, some insiders believe that major financial players may already be making strategic moves. The potential outcome? A dramatic rate increase, possibly even beyond $40 per dinar. This might sound far-fetched to the casual observer, but for those watching closely, a clearer picture is emerging. Let's break it all down, from the current state of Iraq's economy to behind-the-scenes bank activity and global monetary shifts that could all be converging to create a powerful catalyst. A currency shaped by history. The Iraqi dinar, IQD, has a long and complex history. Decades ago, before the 2003 Iraq War, the dinar held a far higher value, even exceeding that of the US dollar at one point. However, with the fall of Saddam Hussein, war, sanctions, and political instability, the dinar plummeted. Since then, it has traded at a fraction of its former worth. Still, many investors have held on to their dinars, hoping for what's known as an RV, or revaluation, where the exchange rate is adjusted upward dramatically. While most analysts remain skeptical, others argue that Iraq's economic transformation could make such a leap not only possible, but likely under the right conditions. Whispers from the financial world. There's growing speculation that major banks and financial institutions might be preparing quietly for an upward shift in the dinar's value. Some reports suggest that private banking advisors have been recommending high-net-worth clients accumulate dinars behind the scenes. This type of movement is not typical of fringe speculation. Institutional investors, particularly those in the banking sector, rarely take significant positions in unstable currencies without substantial confidence in future developments. So, if these reports are true, what do they know that the public doesn't? The likely answer is a lot. Big money usually moves before the general public is even aware something is happening. They have the resources, analysts, and access to insider conversations that allow them to get ahead of the curve. And right now, they may be positioning themselves for a massive shift. Why would the dinar revalue now? A 40-plus valuation might seem extreme, but proponents argue there are several underlying factors that could justify a significant increase in the dinar's value. Chief among them is Iraq's oil wealth. Iraq possesses one of the world's largest oil reserves, and oil continues to be the cornerstone of the global energy economy. As Iraq stabilizes and increases its oil exports, the nation's revenue base is expected to surge. Secondly, financial reforms in Iraq have gained momentum. Over the past few years, the Iraqi government and central bank have taken steps to modernize their banking system, crack down on money laundering, and improve transparency. These efforts, in cooperation with the IMF and World Bank, signal a move toward a more stable, trustworthy financial system, a crucial step in building currency strength. Moreover, foreign investment is returning. International companies are beginning to operate in Iraq again. Large-scale infrastructure projects, including new schools, hospitals, roads, and energy plants, are underway. This economic momentum could form the foundation needed to support a stronger currency, a change in sentiment. Another key development is the shift in public and investor sentiment. Online forums, Telegram groups, and private investor circles dedicated to the dinar have noted an uptick in confidence. While hard evidence is scarce, multiple discussions hint at preparations for a rate adjustment, possibly in the range of $300 or higher, with some speculating even greater values based on Iraq's past exchange rates and potential oil revenues. The idea isn't based purely on rumor. The Iraqi central bank has introduced a range of reforms aimed at stabilizing the currency, such as increasing foreign currency reserves, reducing the economy's dependence on the US dollar, and controlling inflation through tighter monetary policy. These are all classic pre-revaluation behaviors observed in other nations that have adjusted their currency values in the past. De-dollarization and a new global landscape. One of the strongest signals yet may be Iraq's recent moves to reduce its reliance on the US dollar. Known as de-dollarization, this process involves reducing the use of the dollar in domestic and international transactions, instead promoting the local currency. Iraq has started encouraging businesses and trade partners to use dinars rather than dollars, and some international contracts are now being signed in dinars. This aligns with a broader global trend, particularly among BRICS nations, to establish a multipolar currency world where local currencies play a greater role in trade and finance. Though Iraq isn't a BRICS member, it may be leveraging similar strategies to strengthen its independence, and that means bolstering the value of its national currency. Timing is everything. The global economic climate might provide the perfect window for such a move. The US dollar is facing challenges, from inflation concerns to shifting interest rate policies. Many countries are re-evaluating their dollar exposure, and that creates an opportunity for nations like Iraq to reposition their currency and gain more control over trade and capital flows. If Iraq times its revaluation correctly, it could maximize the benefits: greater investor confidence, more favorable trade deals, and a renewed sense of national pride. But timing such a move is delicate, and officials will only act when they believe the economic foundation is secure. The human factor: renewed national pride. Perhaps the most underrated component in this equation is the Iraqi people themselves. After years of hardship, there's a growing wave of optimism in Iraq. Young entrepreneurs are starting businesses, digital banking is expanding, and the population is becoming more financially literate. When citizens begin to believe in their economy and currency, it creates a powerful feedback loop that boosts currency strength even further. Confidence, after all, is a key driver of any currency's real-world value. Final thoughts: hope, strategy, and caution. So, is a revaluation of the Iraqi dinar to $40 or more realistic? It's still speculative. No official confirmation has been made, but the signs are becoming harder to ignore. Oil wealth, financial reforms, institutional interest, and currency policy shifts all point to the possibility that Iraq is preparing for a major financial transformation. Investors should remain cautious. Like all emerging market currencies, the dinar carries risk. Political instability, economic shocks, or delays in reform could derail progress. But by watching market signals, tracking government and central bank actions, and staying informed through credible sources, you can make smarter decisions. Don't get swept up in hype or rumors. Instead, follow the fundamentals and pay attention to the slow but steady evolution of Iraq's economy. Disclaimer: this article is intended for educational purposes only and does not constitute financial, legal, or tax advice. The foreign exchange market is inherently risky and prone to misinformation. Consult with qualified professionals before making any investment decision. Iraqi Dinar RV is not liable for any losses or damages resulting from the use or reliance on this content.